behind the scenes, it was a small group of people that were doing everything.
Welcome back to the GTM Podcast. It's your host, Scott Barker.
I want to know how this insane growth actually happened.
We are back, baby. Welcome to the GTM Podcast. This is our monthly bonus episode, and I get to welcome back a very special guest. You may have known him from bonus episode 2 bonus episodes ago. I'm joined by Paul Irving, our principal and platform director. What's up, brother? How you doing?
They couldn't keep me off. I locked Max out of the podcast studio. I got the taste of getting on the GTM pod, and they couldn't keep me off for more than a month in between. It's great to be back, my friend.
Is that who's been banging on the door all morning long? He just he can't get in.
I told him to be quiet. I told him nothing was going on, but maybe he's caught on.
I love it. So Max is actually over in Rome taking his first vacation of the year with his family, eating all the meats and all the cheeses. I'm very, very jealous, but we are holding it down in Vancouver. How's the summer been going, man?
It's been going well. I should mention, I don't know if Max looks like he's eaten all the meats and cheeses yet. I saw a photo on LinkedIn. He's looking like he got in shape behind our backs just in time for summer. So kudos to him. He's doing a better job than I am. But it's been good.
He's been keeping that on the DL, I think. He's not letting us know. He's just going to show up to our retreat in Napa all jacked, and we're going to look like slouches. But I don't know, man. I've been getting my hot yoga in, so I'm very, as you know, very competitive. So now I got to kick it into high gear.
Well, you both are doing much better than I am. It's been a really good summer, and I know we're going to jump into some of the travel stuff, but it's been busy, not seeing any lull from the GTM fund side of things, and not seeing too much of a lull either across the market, across startups, across other venture firms and partners that we know well, which I know we're going to dig into. So it's been a great summer. We've had beautiful weather here in Vancouver, and there's been tons of travel, lots of stuff going on. It's been exciting.
Yeah, man. I feel like I got bamboozled because before I got into VC land, I was told that there is a summer lull, right? You see like on Twitter and all these things, everyone's like living their best life in the summer, and everyone's like, oh no, like funding rounds, like they slow down and no one's really raising money in the summer. And that seemed nice. It's kind of like the teacher trade-off where you work your ass off, but then, you have 2 months of maybe quiet time. But that is just simply not true, at least since we started this fund. Sometimes I feel like summers are even busier. Do you think that's a factor of, hey, we're a startup emerging fund, and that's a factor of just us building this thing? Or do you think maybe this year in particular is a little bit different, just given the market?
I like to believe that the waters of Lake Tahoe and the beaches of south of France are still not doing too bad, despite it being a little bit busier in the VC landscape this summer. I still think there's activity going on out there. But I actually do think this year is a little bit different. There's going to be a factor of, us growing and scaling and building. And we've got, more exciting announcements coming up soon, which is fantastic. But I think there's a general trend in the macro environment, which has played a big role into this as well. You saw Carta actually releasing some interesting data after the close of Q2, just seeing an increase in valuations in round post-Series A. So B, C, D, smaller sample sizes than you would have seen in 2021, 2020, of course, but still an uptick in both velocity of deals and the valuation of those deals. My guess is, and there's a lot of theses out there on what's exactly happening and why. I think it's a product of people sitting on the sidelines a lot in 2022, waiting for the market to settle. And there's always going to be a timeline for the funds that you are looking to deploy. And at a certain point, when you start feeling comfortable that either the macro environment out there is improving enough that your models start to make sense again, or you're just seeing great companies and great companies still need to get funded. But we're seeing an uptick in volume. I mean, the NASDAQ is 30% year to date at the time we're recording this. Public markets have generally rallied. June inflation data was really healthy, 12 months of decreases in a row, and there's still a lot of noise and a lot of data out there to be concerned about. But I would guess that some of the increase in velocity is just from people who spent a little bit more time on the sidelines than normal in the past year and a bit, and are starting to feel comfortable and starting to feel little bit more of the pressure of, we have to start deploying this fund, and there's still great companies out there.
So you just mentioned a lot of positive signals there. Are you overall have a pretty positive sentiment on the trend of, both the private and the public markets right now?
I think it's all relative. If we wanted to spend and make this podcast longer, I could come up with a bunch of negative data, the sky is falling, and we could all be incredibly worried by the end of it. But I think there is more positive data that this might not be as hard of a landing as a lot of people were theorizing early this year and late last year, or even middle of last year, if you want to pull it back even farther. Interest rates have settled a little bit. It's clear that the Fed and central banks across the world are taking a little bit more of a pause after one of the fastest rate hike increases in history. That's good. I think even when you look at how high interest rates are going to be, people want some equilibrium to form, whatever number that might be. You pull the chart back historically, and the interest rate levels that we're at now are not abnormal by any stretch of the imagination. I think people just wanted them to settle, and what we're seeing is settling of the dust more than there's a million reasons to be positive. There's still a lot of reasons to be concerned, but it seems that everything is starting to settle a little bit. And that's when people can start making long-term investments, start building a thesis that they expect to hold for a period of time that's longer than 1 month or 1 quarter, which is seemingly how we've been living for the past year and a half, quarter by quarter, month by month, looking at the data and trying to figure out what the most likely path forward is for the economy.
Yeah, I think that's a great point of view. And, that kind of resonates as this idea that we might not exactly know where we're going yet, but our vision isn't as cloudy now. We can kind of see the pathways in front of us, so people can make those decisions. And, something from my perspective too was, you mentioned people waiting on their hands. There is also things got really hard over the last year. So it does seem like a lot of the tourist founders, tourist VCs, people that were half in, half out, who maybe thought this was easier, are leaving or kind of got pushed out or not starting companies anymore. They're taking a path to security. And so you're kind of just left with these maniacally obsessed people. And I don't think maniacally obsessed founders or VCs give a shit whether it's the summer or what month it is. They're just going to find the best deals, build the best companies, and make things happen. So it's kind of a cool transition to see. But pulling back, so going back to kind of what we've been up to this month, you and I were very fortunate to go to Hong Kong. We went to New York. We went to Toronto. I went to Philly, spent a little time in Bali just for personal vacation. But Hong Kong was a pretty special experience. It was cool to be able to share that with you. And I don't know if people know this, but we were actually on like a U.S. trade mission, which was super interesting. What was some of your favorite parts of that trip? And maybe we'll talk through some learnings over there.
It was great to be back. I had been to Hong Kong only once before. It's one of my favorite cities in the world. I hate the word foodie, so I don't want to classify myself as that, but I do care a lot about.
You are a foodie.
It's just the label.
We can find a better
me.
word, but
all right. Any listeners out there that have a better term for foodie that I would be excited to label myself as, I'm open ears. But I care about
connoisseur, my friend. A food connoisseur.
I'll take that. That's a good placeholder. We'll put food connoisseur in there for now, but it's just one of the best food cities in the world. It was great to be there. I think we landed and tried to find somewhere to eat at 11 p.m. after getting in late. We found this Peking duck place just around the corner from where we were staying that was unbelievable. Took you to Tim Ho Wan for some dim sum in a subway station. You had to trust me. We had to wait, half an hour to get into a subway station dim sum place, but that was incredible.
Cheapest Michelin star restaurant in the world, right?
I believe so. I think it still holds that crown, but just, unbelievable meal. And then a very cool city. um, very alive, bustling, and we were busy the whole time too. So I'm sure you could give a little bit more context of what the actual days looked like, but it was, no rest for the wicked when we were there.
Yeah, it was wild. So we had dinner actually at the U.S. Consulate General's house that sits on this like huge compound overlooking Hong Kong. We were there with a handful of other VC, private equity firms, real estate developers that came over from North America and met a bunch of institutions and family offices and high net worth individuals over in Hong Kong. And that was a pretty special experience. There's clearly a lot going on in Hong Kong. There's a lot of wealth. There's a lot of money. A lot of great businesses being formed. And then the next day, which was crazy, you and I had 6 straight hours of back to back to back pitches. I think we did 16 pitches in a row, like 20 minutes, 20, 30 minutes each. And I've never in my career, I don't think, no, definitely not, done that level of in-person, back-to-back, no rest. Like, I think I ran one time to go to the bathroom and that was it. So it started really like understanding our value prop even better. There was a lot of great questions, and I guess just the learning was pretty intense.
It was someone from the U.S. Consulate General's office before it started said, we actually make money selling diapers before the pitches because you can't go to the bathroom. You're in there for 5 hours straight and you don't have time to do anything. And so they weren't joking. It was really interesting. And we also learned, talking to some really smart investors while we were there, just asset class comparisons, how that differs internationally, what people's priorities are from a return perspective, from a time period perspective. I know real estate in the area has just been a boon for multiple decades, and you're always sort of benchmarked against the performance of that asset class. And it was interesting, a lot of smart people, and I think a really great experience for GTM Fund as a whole.
Yeah. And it should be fruitful for future funds for us. It was interesting to see the difference between kind of perception of VC over in Hong Kong versus US. I would say they're slightly behind in their kind of education of venture capital as an asset class. I think they're just waking up to the risk profile of like growth stage firms. And, we play earlier and that seems like still new to them. But it seems like they're starting to get there, which will be cool to see when that, floodgate ultimately does open because it will. And then the other kind of learning too was it's just a little more complex than it maybe used to be to actually transfer money and wealth in and outside of Hong Kong and China.
Tech has been an international enterprise for a while. And so it's going to be interesting to see venture capital become, and you've seen it over the past several years, but I think it's pretty clear if you want to pull back from 20,000 feet and see that venture capital is going to become an international game if it hasn't started becoming that already.
And then, so we're in Hong Kong, we fly back, we have a big executive, LP dinner in New York, which was awesome. Shout out for Seismic for partnering with us on that one. We had about 40 people show up, which was cool. And then we did the same thing in Toronto, literally like right after. Flew in for Collision Conference. Had about 28, 30 folks there, partnered with Oyster on that one. That's always fun. I also love getting the Canadian community together. It's a growing ecosystem, and we're very fortunate to have some of the like top players in Canada around one dinner table.
It was a lot of fun. We joked around going into it thinking, let's do the Toronto dinner around Collision. We'll get people from all over the place. And then I think we got 98% Torontonians anyway, but some really fantastic people. Both dinners were great. I tried my hardest to join you in New York. I got caught up in those crazy flight cancellations with thunderstorms going into every single New York City airport. I was on a 1 a.m. red eye to Toronto to try and hop, skip, and jump, rent a car, drive across the border, maybe to meet you in New York and make it happen. But you, like a pro, hosted a 40-person executive dinner solo because I couldn't get there in time. But both of them a great success. And as you mentioned, big thanks to Seismic and Oyster for partnering with us on this.
Yeah. 8,000 flights were canceled. I feel like they could have made a movie though of like Paul trying to make it to New York. You were really exhausting every option. And by the end, I was like, listen, man, I'm good. I've done a lot of these dinners. We're good. I appreciate the effort though. The Herculean, is that a word? I think, I don't know. It is now. Effort to get there. It was.
I just imagine we had an executive dinner in Toronto the next night, and imagine me in a broken down car in Buffalo or something, and I never made it to either one. So we thought let's diversify our risk here a little bit, and I'll stay in Toronto, you stay in New York, and you made it up for the Toronto one as well. No problems on that flight. So a ton of fun. Always great to get the community together in person.
Totally. All right, shifting gears a little bit. This is a story-based podcast, and I like to bring in some stories, even in the bonus episode. You want to share an insider story from maybe this past month with one of our founders or LPs, just some cool things that kind of come from building this community.
Yeah, I'll do a quick one, and we included it in our monthly update, which we share internally with our GTM executives and LPs, but it's very obvious on the surface to know the power of network. It's introductions to your next hire as an executive. It's warm introductions into accounts you're looking to sell into. It's back channeling. Those things are incredibly valuable, but I think what people often overlook is the power of network when you have a certain scale or a certain value of the people that are in that network. And we had some really cool stories happen in the last month, but these happen all the time. We just wanted to highlight them. A couple of our founders in really the power of the GTM network, but you could parlay that into the power of any really incredible network for our team. So we have one, and I'll be careful not to divulge too many details because they're still in stealth, but a company of ours that we had invested in recently shared some details with one of our GTM leaders, and outside of their long time operating career as a CRO, have a side business with their wife that happens to be the ICP of that company. And so when they found out about this investment and we were talking through it, they said, let me find some time with the founder. Came away from that, and I got an email from the founder with a bullet pointed list of all the things that were helpful. We spent 1 hour together. I have my first 3 design partners, which this LP volunteered to be for the business. I have a bunch of GTM strategy and approach and advice. I've rethought how I'm taking the product to market. And hopefully, if we keep kicking ass, I might have my sales leader of the future and not too distant future, which is really, really cool to hear. And so the layers that happen with that, when you have the right people in the network and can make those connections, are just invaluable. We had another one that I'll briefly allude to, Kidsy. So congratulations to the Kidsy team. They announced their latest round of funding just last month as well. But they're in the computer vision space, can transform your CCTV network into invaluable business insights by processing unstructured data into any really business case or use case that your business would find valuable. We have one of our great GTM leaders, Juan George, JG, who I believe has been on the podcast previously, was at Olo from seed stage through IPO, reached out to me when Kidsy announced and said, hey, I've been looking at how to apply this technology in the restaurant vertical for a while. Would love to meet with the founders. I can share all of our findings about how this technology can be leveraged and applied in a vertical, which we know is going to be a vertical of interest for them as they scale. And beyond just GTM strategy advice, introductions, you'd see the layers. The iceberg analogy is so overused, but I think it's true here. There's the very obvious value, and then you have the untapped potential beneath that, which we're seeing it more and more. But smart founders and smart executive teams, when they're raising funding, being really conscious of what networks I'm bringing on to support my company as we grow, as we scale, and how am I going to leverage them? Because the power is hard to quantify, even if you think you know the surface value.
Love hearing stories like that, the not so obvious connections that happen within this community between our LPs and our founders, between our founders and our founders, our LPs and LPs. It's so cool to see above and beyond what we just thought that we could help with initially, which was like, oh, well, all these people have great playbooks. They all have great networks for, customer introductions. But these things, they really are hard to measure the impact, especially at that like early stage. Imagine if you could just tell a founder, hey, we've got your first 3 design partners. Like that can take months. And especially if there's that like personal connection where they're actually super bought in, because not every design partner is created equal. You really need someone who is going to think of themselves almost as an owner of your business. And it's cool that obviously our LPs think like that because they are, and that personal connection. But that's awesome, man. So here's the last thing I wanted to talk to you about. I think it's interesting. People will find it interesting. It's something we talk a lot about, and it's almost an ethos that we adopted pretty heavily internally. And that's this idea of a flight to quality. So people may have heard that before. It has, I think, Bain was the original one who wrote it, if I'm not mistaken. But can you walk through what that means, and then maybe we'll talk through how we sort of adopted it as our ethos?
Yeah, the flight to quality, and I think it was Merritt from the Bain team wrote a really good article summarizing this at the very beginning of the year. But the concept is when things get a little bit more challenging, and it's been the case for a long time, you're just starting to feel it, is capital is going to start to flow to the same companies, the best companies. When people get nervous, when people are careful and intentional about where they're investing their time, where they're investing their money, if you're in venture capital, you start to see more and more focus on what you would describe as the top decile of companies from an founder background perspective, from a market opportunity perspective, from an execution perspective. And there's been a time over the past several years when there was so much money in venture capital that almost every seed stage company was getting funding, and the Series A graduation rates were a complete anomaly if you look at them historically and start to pull back multiple decades in SaaS specifically, but you could pull that back across tech generally. And you're starting to see it really acutely. We've talked about it since the early days. We would rather work with an experienced founder, an experienced operator who has deep ties, deep understanding of the problem they're solving, of the market opportunity in front of them, have a network to lean on to execute it in the earliest stages. We want to work with those teams, and we're happy to pay, a slightly higher price that comes along with that decision. And I think you're starting to see across early all the way to growth a pretty similar mindset. So that's how we would define flight to quality.
Yeah, and I guess that what that means from a firm perspective is it's now more competitive than ever, for those top 1% deals. And if you don't have a super defined differentiation of what is the value you bring beyond capital, and we talk about capital plus all the time, then it's going to be really hard for you to get a piece of those deals. And so I think that's for us, we've taken that flight to quality and be like, okay, how do we fly to quality as a firm and up level absolutely everything that we're doing, so we can showcase, we have the best go-to-market operators in the world, and you can listen to them on this podcast. You can hear what they have to say detailed on our newsletter. And then you can be a part of these community and these dinners and these retreats that we do. And then, of course, the fund, just getting even more operational rigor than we've had to date, making some key hires. We just brought on an analyst, which will be super exciting. Shout out to Amit. Welcome to the team. He was interning for us for a while. But it's been really fun, and it's fun to grow up as, feeling more like a true financial institution now, with everything that we have in place, and seeing our win rate in deals, because we got a lot of revenue listeners that listen to this and they're always tracking win rate, but we track our win rate and I'd say it's pretty damn high, in the top 90% when we want into a deal, which is fantastic. And it's kudos to, again, that community that we get to kind of stand on the shoulders of.
Yeah, the bar's been raised. And that means, as any good startup would look at themselves and say the same thing, like, we need to raise our bar too. And kudos to you too, and Sarah, for up-leveling the GTM podcast, the newsletter, some of the exciting stuff we have going on the media side of the business. I mean, it all feeds into the flywheel of getting the best revenue operators into the fund, getting them engaged in supporting our founders, and really accelerating what it means to drive value for us when we are on a cap table with our founders. And it's interesting from a bunch of perspectives. I'm curious to know what you think, if other firms are going to start tweaking or changing or rethinking what their value proposition is, because it's getting more and more competitive to get into these deals. There's a lot more people in the room trying to get into the same companies and capital that gets to be put to work. And we're lucky to have a clear proposition on what we bring to the table. I'd be curious to know if you think people are going to start, rethinking what theirs are as this continues to accelerate.
You need to be a brand name. Brand names will always be great. That's a great signal. You raise from a brand name, you're always going to be able to raise money. They also have incredible networks and provide a lot of value. But kind of these middle ground firms, I think it's going to be tough if you don't have solid differentiation. Again, I always look at it like startups. If there's a million startups doing the same thing you're doing, how are you gonna win? It just makes it incredibly difficult. And once you've exhausted your network, like, where do you go from there? And network only gets you so far. So I think everyone is thinking right now about that plus in Capital Plus, and redefining what that means for their specific firms. But I think that's it, man. The only thing I wanted to highlight was, I want to tease this out, is on the media side, we do have some very exciting announcements coming up next month, which I really want to talk about, but we'll have to hold on, and I'll just leave it at that little cliffhanger before we sign off. And Paul, I would say goodbye, but I'll see you in about 30 seconds because you're in the office next to me. I just can't get away from you. Thanks for jumping on. And for all those listeners, I appreciate you hanging out with us. I hope that was informative. As I always say, listening is one thing, executing is everything. Go out there and crush it. We'll see you next week.